to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies. And today we're going to have a live trading, our weekly discussion of current market conditions and what to expect in the market, and go over what works, what doesn't work. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to say hello to new subscribers. To just type in first. Again, main difference between our Tradespoon services and one of the other newsletters is that my background is technology. We're invested very heavily in AI and finding signals and building models that can find which stock should outperform the market. And then I trade them in a live trading room using my own money, and I use them to manage my own portfolio. So that's my background. Disclosures are very important. I'm going to go through specific trade ideas, so it's very important to look at the disclosures. Trading stock and options involve risk, not suitable for everyone. If you're new to trading stock or options, I encourage you to visit the link on your screen so you understand the risk associated with trading stock or options. And you can always pause the screen if you need more time to read the disclosures. All right, let's jump into the market. Well, spiders are up after a pretty sharp sell-off, right? Yesterday, when I mean, we had news, which is not new news, right? That Iran might retaliate against Israel, escalation of tension, but that happened not yesterday. The rhetoric happened even before that, and then followed by the I don't want to pronounce his name, but one of the Fed committee members, right? Neil Kashahari, along with Goolsbee, all the Fed presidents of different regions, Chicago, Cleveland, Minneapolis, basically said, listen, if the inflation data is going to come higher than expected, right? There is no reason to cut interest rates. And actually, the futures market after the unemployment data today actually indicated, I think, only 15% chance that there will be one interest rate cut this year. Oh, sorry, 15% chance in June. No, that's not the right statement. So there's only 15% chance that the rate cut will happen in June now. So it looks like, you know, April, May is off the table, and potentially June is off the table. And I think based on the futures implied volatility data, only, I think, 2 rate cuts, right? And now we have CPI and PPI data. So, right, so the futures data is kind of a voting machine that says how many people vote and think that we're going to have rate cuts. So with every stronger than expected data, whether it's manufacturing data or whether this is unemployment data, or why do I get these McDonald's ads in different languages? It's very interesting. Okay. But anyway, and the main price action is in 10-year yield, right? We kind of broke through the 4.3, and I think that's probably the main observation, right? As long as we are above 4.3, right, 0.433, that's also the October of 22 high. That was also August of 23 high, right? Every time we jumped above that level, especially, you know, in August, right, October 22, that was actually the peak of the sell-off, right? And then when the rates dropped, market had that now almost 2-year rally, year-and-a-half rally. When the rates went above 4.3, 4.35 in September, August, September, also we had a 10% pullback. Shallow pullback, but nonetheless 10% pullback. So we're short. We touched 440, right? We touched 440, which makes bulls a little bit nervous, right? If you're a bull, you should be probably nervous, right? But nonetheless, we're kind of got back to the range, and people are just digesting the inflation data. Unemployment data, which came in much better than expected, right? Still resilient economy. Everybody's employed, wages are good, people working more hours, and productivity is increasing. So all indication of resilient economy, strong consumer who's spending money, right? That should translate in better earnings in, you know, Q1, Q2, and for the rest of the year. But it also means that inflation is probably here longer, right? Higher for longer. And that's why rate went to 4.4 basically all throughout the week. And we're fighting for this line, right, between bulls and bears, right, 435. If you look at the TLT and positioning, April 19, April 17, there's still pretty large positioning at 98 and 100, right, going into, so people think that the rates are actually going to drop and TLT is going to rally. It hasn't been the case. The trade is in a different direction, but the main event will be, again, it's the macroeconomic data, and the main data is CPI and PPI. One of the arguments is that inflation in Europe, Canada, Sweden, Germany continue to go lower, right? Continue to trend in lower. United States seems is the only exception because the economy is stronger and more resilient, and as long as people making money and working longer hours, they're gonna spend, right? They're gonna spend money. So that's the main event. We did have a pretty sharp pullback in QQQ after the Neil Kachahari, basically saying that, listen, if inflation is not going to drop, there might be no interest rate cuts this year. Right? People worried about this. We had the same conversation last year, which caused 10% pullback. Now we touched the 50-day moving average. We're bouncing back, right? We're bouncing back as everybody's digesting the news. But for now, 50-day moving average is holding. And the bullish argument is that if you look at the spiders, right? Spiders also broke this uptrend and retested basically 512, let's call it 510 level. For now, and as we said yesterday, right? This is from yesterday. Let's close this. I want to look at the positioning data. That 510 level is well positioned, and actually I think we said that because 510 level is so well positioned in terms of put buying, right, at that strike, put buying, that most likely, even if it's much harder than expected employment number, which actually happened, we're not going to break 510. Why? Well, because one of the reasons people are well positioned, despite the rise in interest rates, right? Initial reaction that interest rates actually went higher for 40 on 10-year yields, but spiders are still up 0.5%, right? So, there was a punch one was the manufacturing data, punch two was this, Neil Kachahari basically saying higher for longer, no interest rates cuts. Then we have the unemployment data, and market's still resilient, right? Despite all these data, well, because this is actually good data. There is good news. Manufacturing is expanding and people are working. There's nothing wrong with that. So it's been resilient. So we're gonna have a weekly expiration, right? So the 4-5 basically expires, right? And the reasons 510 held because somebody was buying significant puts in 509 and 510, right? 509, 510. So most likely the 510 level will hold today. It expires, right? Monday. Major position is at still 510, right? So we're pretty well positioned at 510. 6,000 contracts, not a lot, right? April 9. Kind of same positioning. People are selling calls, 520, 530, 410, 411. Now notice 412. So 412 is next Friday's expiration after CPI and PPI data. And this is, I think, is actually going back to the, somebody, right, is spending, well, let's look at how many contracts, of 430, right? This is not a long old position, which is interesting observation about fixed strike vol, right? Fixed strike vol. So if you go and you're on the option chain for next Friday, SPY chain. So 412, right? Today is 4.5 plus 7, 412. 430, 150,000 contracts, right? So you take 150,000, you multiply it by 100, that's what, 15,000, and you multiply by 115,000 by 100 is 1.5 million. So what is it? 6 million. So you have pretty large position, right? Somebody bought 150,000 contracts aggregate, basically for 6 cents, right? Let's see, is there any other position? 76,455, right? 76,000 bought for 9 cents. What does it mean? That means that this is how it could be. Actually, Nassim Taleb probably buying these puts, right? Because then he made millions of dollars during 2009 financial crisis, basically saying that people are a little bit nervous, right? And he thinks, basically this asymmetrical returns, right? Where you can buy an out of the money put for 5 cents, right? Or for 10 cents for, and assume that market is gonna break down 10% because VIX jumped, right, to 16. The fixed vol strike at the has also significantly increased, right? Where people are buying 460, 480, let's see, and then 419, same thing, right? So you have pretty large positions at 400 level and then 430 level, basically implying that you could have this big jump in volatility, and these are the bets on the on the inflation data, And the only way this will work, right, in this anti-fragile asymmetrical return where you risk 10 cents to make, $1 or $2, is that the VIX is going to jump to 2022. Probably not going to happen until, basically Wednesday, right, the CPI data. So if CPI Wednesday comes in much harder than expected, then VIX is going to jump to 20 or 24, and market is going to pull back. Predicting CPI and PPI data is difficult. I think it's easier to predict that volatility is picking up, and it's probably going to be a very volatile week. This week has been volatile. Next week is also going to be volatile, and it's all about CPI and PPI data. I think if CPI, PPI data does come in harder than expected, VIX could jump 20. The volatility curve could rise, and whoever is buying these, for 30 calls and puts, right, a big position at. 480 is realistic, right? 430 is pretty, but very large position, right? So somebody is buying a lot of these out of the money puts, for 10 cents. If they're worth 20 cents or 30 cents, then. So it just shows you what people are thinking, how they're positioning. Obviously, there's a huge demand for puts, a lot less demand for calls. So on the upside right now, in terms of April 19th, 528. So we could get to 528 level, right? If CPI is actually going to drop the way it dropped in Germany, the way it dropped in Europe and Canada. If inflation drops, we're going to revisit the highs and maybe even break the highs, right? To get to the 528, 530 level. On the downside, short-term, very large positioning is at 500, right? We still have a very large position at 500. Unless it's a really bad number, in theory, the 500 level should hold, right? Just like today, the 510 held. I think if the 510 is broken, then 500 is going to be the downside, and at least till April 19th, and we have JP Morgan announcing earnings next Friday, and assuming earnings are better than expected as people have more money to spend, then in theory, the 500 level will hold. So obviously I would watch yesterday's low, right? 512, that's your first level of support. I propose to trade what you see, not what you think, right? Despite your opinion on inflation. QQQ is at 50-day moving average, SPY is at 50-day moving average. Yesterday's low would be the line in the sand, right? And if we do break after the CPI data, I assume till Wednesday are there any, before I make an assumption, is there any other events? Yeah, nothing is Monday, nothing is Tuesday. Okay, so Wednesday. So assuming Wednesday, for a negative surprise, we're going to retest 50-day moving average. Not a lot. There's still large position at 510, but not as much as 500, right? So I think that would be support number 1, and that would be support number 2, where I think it can hold. All right, so we do these rehearsal exercises. We did it last week, right? I think last week we were at 520. I said, are we going 20 points to the downside, right? Or 30 points, I think I said 20 points, or are we going 20 points to the upside? Going into the earnings season, right? So for the month of April, are we going up 45% or are we going down 45%, right? So basically, if you say 1, you saying that inflation rate is probably going to be a positive surprise, or at least within expectation. You're not going to have hot CPI print, right? So that's number 1. And then scenario number 2, we are heading lower, right, on hotter than expected CPI, because the expectation is that consumers are resilient, economy is fine, people are spending money, earnings are growing, GDP is maybe slowing down, but still in the growth mode. I mean, there are red flags, right? Default in credit cards, real estate, commercial real estate, residential real estate issues. A lot of that is coming due and being refinanced, but it's a tale of two cities, right? It just depends on which camp you think is going to win. But obviously, right now, both camp is winning. All right, so scenario number 1, we're going higher, by 20 points going into end of April. Scenario 2, we're breaking to the 50-day moving average, and we are at least retesting 500 level, right? Much bigger support, for if your time horizon is months, right? Then obviously the breakout, right? This was all-time high, right? This was all-time high. Before it was, before we broke it above, in January. Right, so this is long-term support, right? This is a long-term support. This is medium-term support, and this is short-term support. So how many of you say we're gonna get to 2, but we're not gonna get to 3? Or how many of you say at least, well, first let's talk about medium. We can talk about long-term later. But how many of you say we're gonna get to 500, and how many of you say we're gonna get to 540? Scenario number 1, bullish, and number 2, bearish. Gold is back up nicely position on gold and silver. G is soaring higher. Andrei, yeah, so G is soaring higher. Go back up. Andrei 2, Peter 1, Joseph 1. Okay, so we have few 2s, we have few 1s, 50-50. Anyone else? Bob, what do you think? Martin, what do you think? Michael, Patrick, Rick. A few new names. Let's see, what are they? Okay, Martin, Peter, and another Martin. Okay, a lot of Martins. 1. Okay, so we have half 2s, half 1s. Okay, half 2s, half 1s. I'm gonna go with 1. I'm also gonna go with 1 again. I think it's a flip of a coin, to tell you honestly, but at least most of the economists that I listen to or listen to the podcast or read think that inflation in the United States is also going to trend lower, just like it does in Europe, and you're not going to have another positive surprise. Q1 was more or less anomaly. I mean, I don't know how valid this argument is, but based on some of the charts and graphs that they show, right? Prices for food went down, shelter slowly going down. I mean, oil prices are going up, so that could create an issue, right? But I guess we'll see. We'll see it on Wednesday, right? Crude oil also had a pretty significant jump in the months. This is what, March data, right? So we went from 77 to 86, right? So prices at the gas pump are going higher. Shelter price looks like stabilized, wages looks like stabilizing. So we'll see. I mean, I don't know. There's different components, and a lot of it is just perception. All right. Meanwhile, 10-year yield pulled back from 440, right? It was today as high as 440, right? And now it's kind of in the middle of the range. QQQ has nicely rallied, right? Fred is here or no? Fred is not here. So I did close the QQQ put spread. I mean, before CPI data, if you're concerned with 50-day moving average, then I would put that trade back on, right? And it's probably, let me see how much cheaper it is. So I sold it for 580, it's trading at 490 right now. So one idea is to buy it back, right? Buy it back for 490. You can probably buy it for 490 right now. If you think that QQQ is going to be range bound and unable to break. I mean, maybe towards the end of the session or maybe Monday or Tuesday, but yeah, if you're concerned about 50-day moving average and this medium-term support does not hold, then I would buy it back. In terms of positioning QQQ, I think we said 430. It looks like it's pretty well supported. So if you are going to do it, you want to probably do it at the upper range where the QQQ has been trading for the past few weeks. So let's look for 19, April 19. Let's see, April 12th. It's pretty big position, right? 50,000 positive VANA at 430 strike. So 430 strike is probably going to hold, right? At least what majority of the people think it's going to hold. So if you want to put that put spread back, ideally we want to do it closer to 446. VIX, I mean, it hasn't dropped significantly. Still, it's elevated at 16 level. All right. Any questions? Perfect. So how do we help at Tradespoon? There are a few tools we have, right? So again, as I said, the background is we have a team of financial engineers building models. So what I'm trading in a live trading room are signals from these basically three services: active trader, weekly trader, monthly trader. Every day we post signals, right? And you can look for today, right? CF industries, right? So pretty bullish signal in CF. CF, is up today. And that's been the story, late cyclical, right? Which sectors, consider buying? It's actually down 40 basis points. Is materials, right? Whether it's agricultural materials or copper, concrete. One of the strongest sectors, right? XLB, XOP, and XLE. Right? So the energy late cyclicals, that's one of the beneficiaries. Banks, right? JP Morgan is announcing earnings. We did have a pretty sharp pullback yesterday, but still above 50, outperforming QQQ, much higher than the 50-day moving average, and bouncing back today. And industrials, right? So materials, industrials, banks, energy, these are the sectors that are leading the market and looks like recovering most of the losses. Any questions? So these are the active trader, right? You get bullish ideas with specific entry and exit prices. Active trader it looks for 1% gain, 1% loss. Weekly trader, 2%, 2.5% gain, 2.5% loss. If you hold it for a couple of weeks, if you hold it for a couple of months, maybe 5% gain. So these are the signals that are being generated weekly, monthly, every week. Active is every day. So every day you can see the reason I like these, because it tells you pretty accurately which sectors are leading, right? Yesterday was Netflix, right? Qualcomm. These are the sectors that, I mean, obviously pulled back after yesterday's sell-off, but they're still pretty resilient, right? Netflix actually recovered almost all of its losses. So you can always go back and see which stocks you want to buy or which sectors are leading the market, and you can also use options, right? If you don't want to buy a stock and it has weekly or monthly options, then we suggest to buy in the money weekly options, right? But the entry point and the exit point determined by the stock price, right? You know. So that's active trader, weekly trader, and monthly trader. Any questions on the signals? So these are the tools, right? We have active trader, weekly trader, monthly trader. We have tools like stock forecast tools, basically tell you today. So 513 will hold, potentially reaching 523. A neutral trend. So it looks like we're trading sideways. From bullish, we went to neutral after the pullback. And on the upside, potentially revisiting the all-time highs next week, 523. On the downside, you know, it doesn't see momentum below 510. So it matches pretty well with the options data and positioning, which is important information. Right? Again, some people basically look at this chart and say April 18, we will get to 510. No, that's not what the model says, right? Just like positioning doesn't say that we will get to QQQ 430, right? It's just a voting machine, right? It looks at the positioning, supply and demand, and basically says, you know, maybe one standard deviation of 70% of the time, QQQ between now and April 19 should trade between 430 and, you know, 455. Okay, I think it's reasonable. That doesn't mean that it will trade at both extremes. It doesn't mean that, you know, on April 19th it will be at 440, but it gives you the range that you can expect in the next 10 days, and it gives you momentum. So neutral momentum, and it gives you a range where you can expect model to trade. You can create your portfolio of different symbols and manage them. We have company screener, right? You can look at, you know, which sectors are outperforming: hardware, you know, diversified services, semiconductors, energy names, financial names. These are the sectors that are outperforming. So these are the tools. Elite service is where I actually trade these signals and I manage my portfolio, right? So you can see I closed QQQ put spread because it reached 50-day moving average, so I wanted to take some profits. And you know, I bought energy. I added to NVO. Probably should trim NVO now. We'll do it close, so it's up 1.5%. So these are a combination of both stock and option trades. There are directional trades like QQQ spread, or we did GE spread this week, or the event-driven, right? Earnings. And this is where, you know, I'm trying to find these asymmetrical returns, going back to anti-fragile, right? What the author is talking about. Gains from the soar, right? You want to be anti-fragile and you want to look at these asymmetrical returns, right? Event-driven strategies, or buying these out-of-the-money puts with the assumption that the market is going to collapse by, you know, next week. These are asymmetrical returns, right? You invest in 10 cents, 20 cents, and you're hoping 10 times the return. And a lot of people look for that, right? And he talks about actually barbell approach, right? The idea that 90% of your portfolio, you should not look for, you know, 10 baggers, or whatever you call them, or 5 baggers, right? 10 times, 5 times the return. On 90% of your portfolio, you don't want to do that. But on 10%, because most of the time you'll be wrong, right? Most of these people who are buying these spiders, on Friday, they're buying 460 put, right, in very large quantities, right? Or most of them will be wrong, but that's okay because they're, you know, investing 5 cents and 10 cents, right? They're not but they're going to do it consistently, hopefully until their money not going to run out, right? But they're putting 10% of their portfolio. That's his message. You put 10% of your portfolio, you buy, 460 puts, right? 10% out of the money puts, and at some point, when you have some liquidity issues, that's when you you're gonna invest 10 cents and sell it for $1, right? So these asymmetrical returns. I try to do it in the earnings season. Has been pretty successful in that, because the past 2 earnings season, you do have these 2 standard deviation move, right? You have these tail events, and you can see it almost on daily basis, right? Like play Dave & Buster's, usually not the most followed stock, but it moved 10 to 15%. Right, with the PVH, I think I did in my personal account, same thing. It usually doesn't move that much, but it moved 25%. It hasn't moved 25%. I mean, I don't even know. Probably never moved 25%, or at least for a long time. Right, 25. So such a big gap hasn't happened in 20. Even in 22, it hasn't happened. But you get the point. 20, 21. I mean, you have to go very far to find these 3 standard deviation moves, right? Basically saying that people are nervous and people don't want to hold the positions for too long, even if it's a well-covered name and well-liked name. And if they hit a home run, right, like Micron, right, AI, especially AI stocks, you will have 2, 3 standard deviation move. And if you don't, like Nike, or then you have a 2 standard deviation move to the downside. Or if FedEx, you have great earnings, you have 2 standard deviation move to the upside. So you do have this event driven. We're approaching earnings, and I think I would be long the volatility, right? Usually I'm short volatility, right, in the past, but this season I'm long volatility, because you have these 2 to 3 standard deviation move, and you want to be long the vol. You can do it with out of the money puts and calls. You can do it with debit spreads, butterfly, but you pay in debit with the assumption the volatility is going to increase and reach your strike price, right? So I'm actually today going to discuss on TV JP Morgan. So same thing, JP Morgan, very high expectation, right? Into next earnings, basically saying that the largest strikes right now at 210. Right, at 210. This is where it's trading now, and 180. So 2 standard deviation move, JP Morgan can move 14 points to the upside, 14 points to the downside, right? So in theory, I would say it probably will gravitate over these extremes, right? They're either going to deliver very strong earnings, right? And the steepening of the yield curve is good, and they have the best earnings, and we could be at 210. If they miss on bottom line, top line, or number of defaults, credit card defaults starts going up, or loan delinquencies, it could get to 180, right? So you can do butterflies, or you can do spreads, right? Strangles, like debit call spread, debit put spread, butterfly, put counter, call counter. All of these are choices that you can do to be long volatility. If you think JP Morgan is going to move in these 2 standard deviation, if you think it's only going to move 1 standard deviation, which would be, maybe $7, right, 3-4%, then you sell out of the money puts and calls, right? You sell volatility. Right now, as people are nervous, probably you want to be long vol, and look at the open interest at certain strike prices as where the stock potentially can gravitate. Qualcomm. So I did put a Qualcomm position, hold it over the weekend. I don't think anything is going to change between now and Monday at least, unless there's some. But I did buy Qualcomm into the next week. You have pretty well positioned at 155. That's a lot, but that's far. 160. So 160, and then let's see. So it looks like 160 position. Let's see, May 9th, 17. Yeah, so right now it's not a huge position, but there's some at 160, a little bit. Well, that will expire next week. 155. Most of it is 160. Semiconductors, and you can see a lot more activity in calls. So people are not hedging their position. That is a concern. That is a concern. Obviously, 160 is a pretty sharp drop. Let's do 163. So this would be a couple weeks low. So 167.40, I would be concerned. So somewhere between 165 and 167, I think it will hold. Obviously, if the CPI data is going to come in worse than expected, it will not hold and it will sell off. So you have two choices, right? One is close the Qualcomm right now, take 2% loss, right, on that stock. You know, we did talk about reducing your position to a half. The other choice is to buy a hedge, right? The idea that, you know, the only reason Qualcomm will sell off if QQQ doesn't hold the 50-day moving average. 60% of the time, 70% of the time, QQQ holds its average. A lot of it will depend on the CPI and PPI data. If you don't want to take the risk, if you don't want from 2% loss to be a 4% loss, you either buy a hedge, QQQ put spread, or you just close position and you don't hold it in front of the CPI data. Because obviously, if QQQ is unable to hold 50-day moving average, Qualcomm will not, you know, Qualcomm will sell off below 167.5. For now, it looks like it's holding the position. I would watch this level. If QQQ does drop below 434, 430, that would be your signal to get out of Qualcomm. I'm personally going to hold it overnight. I don't have a lot of bullish positions. You know, I trimmed most of my position, like Deere and NVO, General Electric. So I closed a lot of positions this week. So I'm on the lighter side going into this event. So, I mean, you can't be completely out of the market. So it makes sense to maybe wait. Any questions? Joseph, thank you for your question. Okay. Meanwhile, again, interest-sensitive sector like KRE, ARC Innovation, and small caps are underperforming because higher interest rates. QQQ semiconductor spires are actually able to stage, I mean, it hasn't recovered all of the losses, but maybe close to half of its losses. But still trading below the downtrend. So, you know, we need to get above all-time highs soon, right, after the CPI data. Because if we're below the all-time high and we're below this uptrend, then the passive list resistance is to continue going lower. So that's the question, is this the top? Well, probably we'll know Wednesday, Thursday. Silver is actually looks like recovering. Right, actually making new highs. I think Bob said it's selling off, but looks like it kind of back up nicely. Yeah. So silver, gold, you know, in terms of positioning, there's just a lot of demand. And that's very hard to reconcile for bulls, right? Why is Qualcomm continues to go on higher and people buying, you know, out of the money calls on Qualcomm or NVIDIA, but they're also buying out of the money 26 and 30 strike on silver. That also doesn't make sense. So there are two narratives, right? There are people think that too much money in the system, inflation is here staying for longer, they gravitate over commodities, right? Whether it's oil, gold, silver, copper. So there's a huge demand, right? And people are buying 26 and 30 calls or structuring their butterflies, you know, at the 26 and 30 strike. What else? So silver, gold is up. How's the dollar? Dollar was up. It actually pulled back. So dollar is actually also struggling with this level. It did break the downtrend. Bulls were a little bit nervous at 105 level, but looks like it pulled back and it's below this overhead resistance. 200-day moving average. So that's relatively positive. And then high yield, we talked about high yield. I would watch this level. I think if the high yield breaks through the 76.5 HYG, that will accelerate pullback, right? Because that means people are nervous and they demand higher yield for the junk bonds. For now, it's kind of trading in the range, so that's good. Any other questions? Right, 10:14. Any questions? So we talked about sector, we talked about position. Curious position on gold and silver. I mean, it looks like you know, Nvidia chart. Right? You look at Nvidia, right? The exuberant excitement, right? Exuberant, what is it? Irrational exuberance is reflected in positioning, right? Even up until today. Even though you can see people are nervous. So before it was all negative, now it's positive. At least people are doing calendar spread, right? They're buying 1,000 strike in April, but they're selling, you know, 1,000 strike in May, or vice versa. This is vice versa. April 19, April, May 17. So April they're selling, right? They're selling 1,000 strike in Nvidia, but they're hedging, but they're long in May. Basically saying that, you know, by April we're not going to get to 1,000, but by May, after the earnings season, we're definitely getting to 1,000. But at least they're hedged. Before it was a one-way trade. Silver is actually positioned differently. Right, nobody's hedging, right? Nobody's selling calls, they're buying calls in rather large quantities. Not as much as before, right? On our 15,000, I think we saw 80,000. So people are unloading their contracts as we actually approach to 26. So the VANA is getting smaller, a little bit less excitement, but still some positions are on. Any other questions? All right, if there are no other questions, thank you very much. I appreciate your time. I'll see you guys at the closing bell or Monday morning. Thank you.